Hello, this is John Lynch, Chief Investment Strategist for LPL Financial. In this edition of Street Views, I'd like to discuss the government shutdown and the market implications. Now, after a 35-day shutdown, the government reopened on a 3-week basis. Now, clearly this weighed on economic sentiment, not necessarily market sentiment, but certainly economic sentiment when you consider reduced tax refunds, 800,000 employees not receiving paychecks, suggestions that there would be a 0.1% hit to GDP each week that the shutdown persisted, and then finally, when you consider some of the air traffic control issues, public safety became a major issue. So fortunately, the government is reopened only on a 3-week basis, but I do think it's important to keep in mind some of the fiscal tailwinds that we have going for us in 2019. Now, over the course of the next 3 weeks, negotiations are going to continue. Both sides seem very far apart on a variety of issues, not the least of which is border security. But I do want to emphasize the importance of fiscal tailwinds. When investors factor in $200 billion in tax relief to small business and consumer, an additional $75 billion to big business, and then $150 billion in the second tranche of the 2-year government spending program, that's $425 billion in fiscal tailwinds in 2019 that can help boost economic activity despite the back and forth between the government shutdown. Add that to the $600 billion in repatriated assets that came back to the U.S. through the third quarter of 2018 and improved lending capacity, we believe there's sufficient fiscal tailwinds to enable this economy to continue to expand for the remainder of the year. Finally, when looking at market implications, I think it's important to look at 2 important historical periods. When you factor in the presidential election cycle, year 3 of which 2019 is, year 3 typically sees S&P 500 returns twice their historical average. So the average annual return in year 3 is 16%. But perhaps more important relative to the government shutdown, we reviewed the last 20 government shutdowns, and once the government reopened, over the next 12 months, the market was up by 12%, again a premium to the market's historical average. So hopefully this Street Views video has provided you with some insight as to the government shutdown as well as market implications. Thank you so much, and we'll look forward to our next episode.